A lot of people are screaming on YouTube and the crypto Twitter sphere that DeFi is dead. We had some major compromises over the last month, and one protocol has really taken a hit from a credibility perspective, but also a liquidity perspective. I'm going to go over in this video why DeFi is not dead. You just really have to be selective in 2026 as to where you want to stake, yield, and grow your money. And I will go over the few platforms that I still have trust in and that I have capital in to be able to yield during these times of the market where I want to accumulate and be able to earn as much extra tokens as possible before we hit the next stage or we turn bullish to the next stage of the bull market. So without further ado, let's go ahead and jump right into the video. And as always, guys, be sure to drop down below, hit that like button, and subscribe to the channel for more. Every single day here on In the Game, we have you covered top to bottom with everything you need to win in the crypto markets. And of course, a big shout out to our sponsors down below in the description. The $100,000 trading competition has begun with our partners at Blowfin. You can sign up for this absolutely free. Every dollar you trade goes towards the volume. If you hit the link below, you can actually trade alongside me and aim for the prize pool of $100,000. So you can join Team Hustle down below at the link in the description. No KYC. You can join this absolutely free from anywhere in the world. $100,000 up for grabs. Let's go ahead and jump right into the video. And obviously the big headline over this last weekend was DeFi. And before we talk about that, the market's looking okay. We have talks of the ceasefire situation either ending and there's no resolution in sight, according to President Trump. So we'll see what happens. But more so, I'm here to talk about DeFi as a whole. Let's go over what happened this weekend. DeFi bled $13 billion in market cap in 48 hours. One exploit on Kelp DAO, which is a very popular DAO, DeFi sort of protocol. The bridge was drained for $292 million, a $292 million compromise. And we'll go over what should change with DeFi. But before that, we'll go over that before, we jump into the protocols that I still trust with my capital. The bridge here was drained for $292 million. The contagion hit Aave the hardest, which Aave is basically the giant of all the DeFi coins. You know, Aave is still above that. If we see Aave go below $1 billion valuation, when just a few weeks ago, this thing was sitting at like 3 billion plus, that's absolutely insane. But the contagion hit Aave the hardest with $9 billion in outflows and 33% of their TVL gone. Bad debt stacking. It's 2026's biggest hack, and it is still unfolding. So we did have this go on this last weekend, and it's causing a lot of fear. If we see here, Kook's tweet, dark days for crypto. DeFi is imploding in real time. There's no reason to seek yield on chain when Sailor will pay you 11.5% with STRC. No assets in crypto look inevitable aside from Bitcoin and Hyperliquid. I do believe this will blow over and total crypto rebounds, but it will be a while. So let's just break down this tweet. I have a lot of the same thoughts. I have some good cash in the STRC. We have talked about STRC. It is MicroStrategy's preferred stock. It will pay you 11.5% on your liquid capital. It is a preferred stock. It stays at that $99 to $100 range for the most part. And every time it's over that strike, they rebalance by selling the preferred stock and using our capital, the investors, to buy more Bitcoin. And we get paid on the Bitcoin yield. So it's a really good flywheel as far as STRC. So I have some money there, and I can't lie, I feel great about that at this point in time. No assets, the next stage here, no assets in crypto look inevitable aside from Bitcoin and Hyperliquid. This goes along very well with what we have been saying on this channel for basically all of 2026. I am done speculating on the new team that comes in trying to innovate the space, or the brand new perps dex that's going to be apparently the next, Hyperliquid, or the GambleFi platform that comes through and tries to break the space or be bigger than Rollbit, or whatever the case is. There's a lot of different things in crypto. The next gaming project with devs from Epic Games. Like, those dreams are so oversold, and we've seen it play out way too many times. On this channel, all this year, at the back end of 2025, and also moving forward, like it's either short-term trades for me or things like Bitcoin, Hyperliquid, Bittensor Tau, the things that I feel absolutely so confident about holding into the next phase of crypto and into the next bull market. So this is absolutely true. Like no assets in crypto look long-term investable other than just a couple of assets. I do believe this will blow over and total crypto rebounds. I do agree with that. Wizard of Soho comes through. My 6% at JP Morgan looking real good given all these DeFi hacks. So, the sentiment around DeFi right now is definitely low, but look, I still have capital in a couple of protocols, and you don't really have to go to great lengths of risk to be able to yield on your holdings at this point in the market. So a couple things I'd stay away from. I'm staying away from ETH chain. I'm staying away from some of these main protocols, ETH forks, Uniswap forks on main EVM chains. I think that those are definitely the high targets, especially when we look at DeFi Llama. So obviously this covers the entire sector of DeFi. And the total TVL is down almost 10% over 24 hours. You can see the inflows here just not looking so strong. And here on Aave, there was a 12% decrease and a 32% decrease in TVL over the 7-day time period. If we do look at some of these different protocols, with the TVL changes, you're seeing minus 50%, you're seeing minus 30%. And this is where some of the stuff, the protocols actually start to get big. We see 8bond went down 33%. Spark went down 31%. They have $4 billion in TVL. So some of these big platforms are getting absolutely hammered during this time period as far as TVL and inflows. And for me, I'm looking at chains that have more of a credibility layer. So one thing I do like about these upcoming protocols is they're not really I would say, as susceptible to either malpractice or compromise due to the way that their networks function. So let's go ahead and jump into number one, which is Hyperliquid. I think Hyperliquid is literally building the future of finance. If you don't see it yet, Grayscale today applied for a Hyperliquid ETF. So that's moving into the next stages. You also have liquid banking with Hyperbeat and Hyperpay, everything like that. So you can actually borrow against your hype, earn yield, earn cash back. They're building a full-blown financial suite. Prediction markets are coming up. You can trade oil, stocks, commodities, everything under the sun on Hyperliquid. They are literally also the highest profit per employee in any business. Let me pull up this graphic here. It's pretty mind-blowing. And of course, they could be targeted because of these numbers in the future. But as of now, their network has been absolutely fluid. Hyperliquid did $78 million revenue per employee in 2025. That's double OnlyFans. That's 4 times what Tether put out. That's 8 times Jane Street. And that's 17 times what Anthropic has done. And they are the biggest thing in AI at this moment in time. So you're seeing on a per employee basis, they are absolutely crushing some of these businesses that every single one of us either has seen, hopefully not using with things like OnlyFans, but Anthropic we're definitely all using, and it's 17 times the revenue per employee. So it's absolutely crazy what they've been doing. And yes, there was a little bit of a dip in the TVL across all of DeFi. People got spooked. But if you're looking to safely yield across Hyperliquid right now, I think there's a few places to do it. Number one is Kinetic. Kinetic is the best and biggest liquid staking on all of Hyperliquid. And you can jump into here and get some good yields. You're not going to get crazy yields because it is by far the biggest protocol. It's double the outsourced protocol size, like Hyperlens at 362 million, and the TVL on Kinetic is almost at $900 million. I'm going to exclude Hyperliquid natively as they're not an app. They are the main layer. And you can see here, Kinetic is by far the biggest, but usually more liquidity means less yields. So if you want to park your money more safely into something, I think Kinetic is a great option. I also do like Hyperlend, and I also like Hyperbeat if you want to do the liquid banking. But what I've been doing with my capital here, and this team has built products in the past that have stood the test of time. And this is Project X. We actually, ironically, talked about this before the DeFi compromise last week. And I'm still over here on Hyperliquid on Project X, and some of these yields, Hyperliquid's token in USDC, you can still yield at 114%. These are real numbers. What you do is you put up 50% hype, 50% USDC. You set your ranges. You do have to actively monitor this. If it goes down 8%, you're out of range. And if it goes up 13%, you are out of range. So if it goes above $46 or below 37, you have to rebalance this. And yes, with LPs, there is risk. There is impermanent loss. You could either sell out of hype into USDC, or you could sell into hype if hype goes down. So it's kind of like this rebalancing mechanism. But the one key thing is you're earning money on all of the fees from the volume on this pair. So this is the most swap pair between Hyperliquid and USDC. People are either taking profits on hype into USDC, or they're selling USDC to buy hype. So this is by far the best liquidity pool, in my opinion, in all of crypto right now. It has been paying over 100% consistently for the last month or two. And I do have a good portion of my bag in this currently. So you're going to want to keep some on the sidelines, but you can yield 100% plus and just keep your assets between Hyperliquid and USDC. And if you're willing to sell out of your hype at certain ranges, this is a great mechanism to earn yield, but also take profits as this goes up into USDC. And if you really wanted to not sell, you could just range this all the way up to $55, and then you could range this down to $32. It's probably going to trade in that range for a pretty good amount of time. We're sitting at $41 right now, and you're still getting 50% APR, and the risk does feel much less than, some people say 100%. That's too good to be true. But with the way that this is set up, you can actually customize the yield that you are getting on this token. Number two is within the Bittensor Tau ecosystem. Now, we've been talking about this a whole lot, but this is just organic. And it is a little bit risky. You can invest into some of these different subnets, but Targon is paying out 5% emissions every single day. And on an average, you can get about 35 to 40% APR as an investor in their subnet. So what you do on the Bittensor network, you come through, let's say you want to look at Targon, and Targon is top tier. They're now partnered up with Venice. They're partnered up with Intel. And as you can see here, every single day, they are giving out 415 Tau tokens to their holders. This is an absolutely crazy flywheel that the Bittensor Tau ecosystem has, where the most successful subnets get natural emissions, and they can either choose to burn them or they drip them down to their holders. So right now, holders of the Targon token, it's an alpha token, holders of the Targon subnet are getting 415.32 Tau every single day, split between the different stakeholders. This provides you up to about 40% APR on the year. And these are the two things that I'm doing right now with my capital. I have really no doubts in my mind that where my capital is parked right now, I feel very comfortable with it. I can sleep well at night. I'm not over risked to where if something absolutely catastrophic happened to any of these platforms, I will still be okay. That's with DeFi in general. DeFi, you have to only be willing to put in the amount that, like, okay, I'm willing to stomach fluctuations or these types of things, because all of DeFi took a hit this last week. I don't necessarily think DeFi is dead. I think that DeFi is one of those fluid parts of crypto that, yes, it's had its ups and downs, but people are going to speculate forever. And for me, most of my DeFi activity currently is parked between Project X and this hype USDC pool. There's $2 million plus in here. I think it's a very safe pool for you to be able to get involved with. And then also on Tau subnets, just kind of spreading my bets, using my Tau effectively to earn yield every single day from these top subnets. So that's what I'm doing in DeFi right now. And it's just ironic because in the last couple of weeks, we have done staking guides for Tau, and we did a staking guide for Hyperliquid. And then we have this DeFi compromise. So it's just a good video to kind of bring it all together. Like, this is how I'm effectively earning 100% on my Hyperliquid holding, but also earning about 40% plus the fluctuation or the upside on certain subnets. If the price goes up on the subnets, my Tau value does go up. So it's a great flywheel for me personally, and it's a risk I'm willing to take. I would not give up on DeFi at this point in time. I just think it's a bump in the road, and maybe some regulations in the future. If Donald Trump really wants to say crypto's the future, maybe some regulations around these protocols and stopping these compromises for the consumers could be a beneficial thing for the future of the crypto and DeFi industry. Guys, like the video down below if you enjoyed the content today, as always, and subscribe to the channel for more. I'll see you guys tomorrow with a big video on the way for you guys, and I will see you then. As always, trade responsibly, my friends. Yield responsibly for this video, I should say. And of course, stay bullish, my friends.